I have written previously on the bias that consumers face from courts and others when they challenge a creditor who is suing them on a debt. The source of this bias, in my opinion, is that partially due to the trust that people put in large banks. For reasons that are unknown to me, there seems to be a tendency to believe that big banks do not make mistakes and that their motives are always pure. Some of this stems from the mistaken belief that because the banks are regulated, that it isn't possible for them to do wrong. But the Daily News tells us that this isn't so. The Consumer Financial Protection Bureau recently went after the big banks. This past summer, they took several of the major banks to task over the tactics used to collect on debts. Here's a sample of some of the actions taken against the banks. Chase Bank USA in 2015 was assessed a $165 million fine and penalty in order to refund $50 million to consumers for illegal collection practices associated with selling accounts to junk debt buyers. Just 2 years prior, in 2013, Chase Bank was ordered to refund $309 million for illegal credit card practices. Another one, Bank of America. In May of 2015, the Office of the Comptroller of the Currency assessed a $30 million fine for Bank of America, also known as FIA Card Services, illegal debt collection activities. Just 1 year earlier, the Consumer Financial Protection Bureau ordered Bank of America to pay $727 million in consumer redress due to deceptive marketing and billing practices. Then there was Discover Bank. In July 2015, Discover was ordered to pay $18.5 million for illegal student loan servicing tactics, including creating student debt stress for borrowers by inflating their bills and misleading them about important benefits. One of the striking aspects of these penalties is that in the case of Chase Bank and Bank of America, they were repeat offenders, and the current penalty was assessed right on the heels of significant penalties issued just 1 year prior. The message that the banks need to play by the rules is clearly not getting through, and the financial benefit that the banks are obtaining through employing the illegal collection tactics must outweigh the penalties being dished out, as if these penalties are just merely a cost of doing business. Despite the parade of horrors that you find in the CFPB homepage when it comes to banks disregarding federal collection laws, creditors often get a pass in court proceedings because the debtor must owe someone else or they wouldn't have filed a lawsuit, right? Often the documents submitted as evidence get only a passing glance and are admitted into evidence despite missing pages, inaccurate information, and the lack of a witness who has any of the necessary knowledge to authenticate the document. Witnesses for junk debt buyers like Midland Funding, Portfolio Recovery Associates, Cavalry SPV, and Cash LLC often state that the bank documents are above reproach because they, the debt buyers, would only buy accounts from reputable debt sellers. The rulings from the Consumer Financial Protection Bureau find the exact opposite to be true. Banks will push the line when it comes to following federal debt collection laws like the FDCPA. And even when they are called on it by agencies like the CFPB, they tend to fall back into their old ways a short time later. Consumers need to educate courts on the findings of the Consumer Financial Protection Bureau. Those consumers who find themselves fighting creditors on junk debt buyers in debt collection lawsuits need to educate the court as to the findings and the sanctions that have been imposed by agencies like the CFPB and the OCC against banks and the junk debt buyers they sell to. The courts are not seeking out this information on their own. Unless consumers bring it to their attention, they'll continue to hear only the side of the bank or the debt buyer. And that is that the banks are reliable and trustworthy, even though that's clearly not the case. Thanks for watching.